Today is April 16th. The market is closed, but we wanted everybody to know about these unusual options on Zscaler that we saw on the last trading day on Friday. So that's ZS is the ticker, and it is currently trading at 105. And so when we look at these unusual options, you'll see here that the 89 strikes that are just expiring this coming week on Friday, April 21. This was all done on Friday, April 14, around 2:30. You'll see all this here, and just lots of these 89 puts. And you'll see when we open up the options chain, this 5 days away. It will, and here it is. The volume is here. It's a total of 4,244 of them. The volume is greater than the open interest, so we know immediately that these are open orders. They're new orders at this 89 strike puts. It is a very low delta, you'll see here, and so it is also very cheap. You can get them for somewhere between $10 to $11 each. But the payout will be very high if it actually happens. So it was very unusual that there were so many of these puts being bought on this stock and just expiring in such short term. And so could this mean something that we don't, that the public doesn't know about, right? So if we look at the current price, when has it ever been below 89, right? Because the recent low for this year was at 98. So if we got to keep zooming back then to see where is that 89? Is it something significant? So let's move to the weeklies. And so we'll actually see all the way here at 89 is all the way back in 2020, in May of 2020. This is when there was this 89 price range, all the way down here. Now, could it drop below that in the next by this week? Right, this week, we have no idea. But it is just very unusual that these were bought for such a short time period. And the thing about buying these puts is also, if we look at the volatility, Zscaler is at only 1% IV. The implied volatility is only 1%. It's so low that this stock at this 89 strike puts, it does not actually even have to drop below 89. It will be profitable if it just starts dropping and the volatility starts to increase. Because, like, for example, right now, if we were to price it for tomorrow, April 17, you'll see here it's sitting at flat here for profit. This is the profit line on the y-axis. So we're here. And so let's say we increase the volatility, because at 1%, there's so much more room for volatility to expand, right? So let's say it increased by just 10%, right? Now we're here. We're actually at $10 now, you see. Without the volatility just increased it. Just one of these contracts, this $11 just made $10, which is close to 100%, right? So that's quite interesting because you'll see here the Vega is 1. So keep in mind that buying these 89 puts, they don't actually have to drop below 89. That as long as the volatility increases, it's going to be a profitable trade. And so we think that because this week is going to be lots of earnings, it's going to be a very volatile week. And this 1% is going to increase. And that's what's going to make these options actually profitable. So it's not just, so keep that in mind when you're trading options, that the volatility is what's going to increase its value, especially for these puts, and especially this stock that's at 1% implied volatility. Okay, so we're not in these positions right now, but tomorrow, hopefully the price doesn't get too expensive by then, and then we can enter this trade. All right, so yeah, take care and good luck with this. If you found value, please smash that like button. Helps us really to continue to make these videos and bring these unusual options to your attention, especially if you have the notifications on after subscribing. You'll get notified as soon as we see these unusual options. All right. Thank you all.